Hello everyone, my name is Adeola Kolawole of aaLawsng. Today I would like to talk about the Corporate Affairs Commission annual returns and annual tax returns. So there's this misconception that both terms are the same. No, there is a difference between Corporate Affairs Commission annual returns and annual tax returns. So what is a CAC annual returns? It's a mandatory requirement that every registered entity must file with the commission, whether a business name, a limited liability, or a corporate trustee. So a corporate trustee is the category where the religious body or a NGO fall under. So they are expected to file the returns yearly. Now for the annual tax return, this is a report of detailing the information about your tax affairs, annually, as it says, whether an individual or as a corporate body. So as an individual and as a corporate body, you are expected to file your annual tax returns. Now we have the corporate one that I expect that as a company you're supposed to file your company income tax. As individuals, now, so I'm going to break it down. So for employers, you are expected, if you're deducting taxes from your employees, you are expected to file your tax returns on or before January 31st. For employers, if you're deducting taxes from your employees, you are expected to file what you call the employer's tax returns. Now this will detail your employees annual, their payer ID, their email address, and all that. Now if you're self-employed, you're expected, self-employed and employees. Now it's better for us to note this, because this one thing, as an employee you may feel that, okay, I'm not expected to file any tax returns. After all, my employer has deducted taxes from me and I've filed it. No, after your employer must have filed his or her own obligation, you are also expected to file returns. He said it will detail what they've deducted from you as as an employee, and also if you have an additional business that you venture into, you're expected to also state it in the tax returns, and this should be done on or before March 31st, of the preceding for the preceding year. There are other categories. We have capital gains tax returns, we have value added tax returns. Now note this, that tax returns, annual tax returns, it's not even if you are exempted from paying taxes, note that even the non-governmental organization NGO are expected to also register for their thing, and even though they are not making profit, they are also expected to also file your tax returns. Even though it's going to be exempted, zero. And even if as a company income tax, now I'm back to corporate bodies now. If you do not earn, or if you're not earning up to 25 million annual turnover, in Nigeria you are exempted from paying your company's income tax. This is now applicable to limited liability companies. Now that does not exonerate you from filing your company income tax returns. So you are still expected to register for companies. Now for company liability companies, you're expected to register with the FRS and also the incorporated trustees, and for to register and all that, and so you are still expected to file your income and company income tax returns on the portal. So all I'm saying in whole is that the CAC annual returns and both annual tax returns are obligations expected of you as an individual or as a corporate entity, but they are two separate obligations, and just to enlighten us not to mix it up. And so as you're trying to stay obligated with your CAC, also know that you also have your obligation towards your tax as well. Thank you.